So collectively, about 400 plus investments.
We're almost one Dave McClure.
What's that?
We're almost one Dave McClure.
Well, I mean, it's interesting with Dave McClure. He doesn't know what he's invested in now. He's got to that point. So let's get the first question out of the way, Gil, which is, how has the funding dynamic changed in terms of total capital needed? And then how quickly can people reach sustainability off of angel funding today?
I mean, I have companies in my portfolio that got to cash flow break even on a seed round. You can get a seed round done. I mean, Old School, which we did through AngelList, closed in 12 hours. So
12 hours.
Funded in a day, get your site up in a day, and be cash flow positive in a year if everything goes perfect, which almost never does. Back when I was first doing this, 98, 99, it was $10 million to get a website up, right? And it wasn't even engineers getting funded, it was MBAs or executives who would put some big company to do it, had the credibility to raise that kind of money.
Let's talk about the company you said funded in 12 hours. What was the name of the company, and what was the dynamic that led it to fund so quickly?
The company was called Old School. They're trying to reimagine the way that parents can sort of come together and do alternative schools, essentially homeschooling, which sometimes gets done in groups. And so they're trying to create essentially resources to let parents do a better job of homeschooling. Max is a serial entrepreneur. He founded Aardvark. He's been at Google for several years. So I think it was a combination of an idea that I thought personally was both big and, more importantly, something I felt really passionate about. Like, if you can make kids' education better, that might actually be a good thing. And then Max's pedigree, and I put a pretty big stamp on it, saying like, this guy's a shit, right?
Yeah.
Let's get this done.
So a combination of known quantity, sold Aardvark to Google, and then yourself. How many followers do you have on AngelList, and what impact does your presence as the first investor have?
So on some of these, like with Max, I honestly, I'm not sure he needed me.
Right.
There are others, like one of the other syndicates that I did through AngelList was called UXPin, which is a wireframing SaaS company. They'd been on AngelList for a year and had raised no money. And then we did a small syndicate. It ended up being a big syndicate. And the next thing I know, it's $1.5 million round with 2 seed funds coming in as well as angels. And so there, at least, it seems like the follower list and the hype that AngelList can give a company and the promotion actually does help a ton.
How many people do you have following you?
8,000 or 9,000.
And your syndicate is how big?
About $1.8 million right now.
Per deal.
Per deal.
Per deal.
Now,
if you compare it to a fund size, you got to multiply it.
This has changed the dynamic. I remember when you and I were angel investing just 2 or 3 years ago, we didn't have this ability to draw a bunch of attention to something. With this great power comes great responsibility. What's your advice, Naval, of how Matt and I and Gil should behave in this new world where one little signal from us can magnify greatly, and sometimes I make choices that are a little bit passionate and, crazy.
Yeah, transparency and disclosure. So if you're going to run a syndicate, we still do vet them in the sense that we make sure that you're disclosing any risks and information you're transparent about any independent shareholdings or affiliation you might have in the company, and quality control, because unlike a private offline investment, your track record here is quite known. What you're doing is visible. These people will know. But we're building in all the tools so that you can actually communicate with your backers and get feedback from them. They can communicate with you about the deal. The company can send structured data back down to them. We do all the reporting. So it's a much more transparent online way of doing financing with your LPs as opposed to kind of the current offline paper and pencil process.
I'll tell you just one other thing, because this hits a nerve for me, right? I sat down with one of the entrepreneurs before we did the funding through AngelList. I said, look, if you take money from Matt or one of these other professional investors, they're professionals. They expect to lose their money sometimes.
Can you say this more to my wife?
Just keep saying it. Right? And I literally said to the guy, if you take money from the angel AngelList syndicate, I have 2 dentists in my syndicate from the Midwest, right? This is like, I mean, I think the phrase used to be used to describe utility stocks, but this is widows and orphans money, right? Like,
Well, to be clear, we're actually preventing that, but they're vetted. Yeah.
They are vetted, but they are not as professional as Matt. They may not fully understand
Right.
the amount of risk they take on. And, you know, this is a certain amount of moral obligation that I have to try to filter these things. Where there are some that I think are too risky, I won't put them up. But also that I want to make sure the entrepreneur knows that he's taking money from regular people that, you know, actually this money matters to them. You know, Matt writes checks and it doesn't matter. It's done, you know, quite well.
Yeah.
I actually think that if you're a responsible professional investor, or you have any track record, is two things are true. One is you end up with a lot of widows and orphans money. I mean, one of our investors literally is a trust dedicated to nothing but taking care of sick kids, and their sister organizations are actually talking to us, you know, when we decide to do a next one about coming in. So I'm going to have 3 million children's cancer therapy, depending on whether I'm an idiot or not. So, I mean, we feel if you're a moral investor, and I think most folks in our circle are, you feel this pressure whether or not you're
I'm feeling
professional or not.
Yeah, tremendous pressure about the syndicate. I mean, I email you, is this one okay? Is this one okay? What do we think about this one? I haven't done one yet because I'm getting a little mental about like, oh my God, my obligation. Now,
Fair enough, we're figuring it out too. So one of the things we're doing is now there's a legal limit on how many backers can be in a syndicate. It's a 99 backer limit. And so we're now going through and vetting everybody for sophistication, letting you start the VIPs and say these are the important people, I want to make sure they're in. Everybody else, we either basically say you have to have a track record of having invested and lost money, and if you don't have that, then we run you through a questionnaire and a vetting process, and if we think that you're unrealistic about your returns or expectations, then don't invest. We don't need you right now. So it's not crowdfunding in that sense.
it's gotten bigger than any of us anticipated. The number of people interested in the syndicate with this 99-person limit, that's a legal limit by the SEC.
Right.
We didn't actually think that we'd get past that. I don't know, mine is 200 and change, yours has 300 or 400.
Also a few hundred.
Yeah, Kevin Rose with 700 and change.
So even with the laws changing, we have exceeded what the laws will allow
At the moment, yes.
at the moment.
No, be very careful. What you have is a set of 99-person rotating interest
Correct.
collections, not actually syndicate in excess of 99 people.
Right.
But I mean, if another Uber goes up, it is going to draw Kevin's 700 people. What do we do then?
Well, 2 issues. One is when Uber goes up, no one recognizes it as Uber. You recognize it way after the fact, years later.
Oh, right.
Business.
Well, Uber was one of the first AngelList startups.
Correct. August 2010, I believe. Yeah.
August 2010. And in the beginning, people don't remember, AngelList was somewhere between hated, loathed, and demised by certain venture capitalists and/or power brokers in the Valley, correct? I mean, people wrote blog posts there, this thing had to die, and this
People were
was...
skeptical, yes.
It
And
was,
then
it was,
right
it was
to be
beyond
also,
skeptical,
you
Naval. They
think-
were outright in contempt of it. People were saying this should not exist. This is going to destroy the ecosystem. This is going to put,
You hear that all the time, though. But, you know, to your point, right, so I'm on the board of Fastlane, which is a CDN company that probably a bunch of people here in the audience use, and they're doing a later stage, pretty hot round right now, and I'm trying to carve out a couple $1 million for AngelList. And I may or may not succeed. But I think it'd be kind of cool to have AngelList not just be, sort of screw with the brand name, but not just be angel funding, but to be able to sort of attack every stack of, every...
The top syndicate leads can write multi-million-dollar checks, and this is before we've even onboarded institutions. So I think at some point you'll see institutional capital coming on too.
And actually, I want to make one other comment. I think people grossly underestimate how profoundly complex and also well-engineered AngelList has become and in a short period of time. I mean, we invest in deep, dark, big data, deep compute, massive scale-out machine learning stuff, and a lot of that touches the financial services industry in one way or another. So we have a sense for how hard this is to do. And in 3 years, I've watched Naval and his team build something that is actually far and above most Wall Street financial systems in terms of robustness and disclosure and proof and accountability and audit trails and you name it. So, kind of pile on to what Gil was saying, we are trying to do more as professional investors. We're encouraging all of our buddies to take not the things that are struggling or could use some, Gil, Angel, Goodness, Halo, or Jason Halo, but the stuff that's crazy oversubscribed, put it out into the community and say, hey, AngelList community, you're going to keep seeing these awesome things. You're going to keep seeing all those gimmies as a way of encouraging this to be a self-sustaining ecosystem.
Actually, that's how I got the deal that I'm syndicating right now, right? OnBeam was oversubscribed, and I went to Jesse and I said, look, I know you don't need the money, but you'll get a massive amount of goodwill, you'll get some PR, the ability to recruit. Like, if you're top on AngelList for a handful of days, you get a flood of resumes. Like, there's a whole bunch of reasons to put a piece of the funding on AngelList, even if you don't need to, just because of the brand benefit.
So angel funding as a category seems to be incredibly efficient right now. What about like sort of micro angel? When you have a concept, this is one of the things I hear from people is I have a concept, their options are go to Techstar or go to Founders Institute or go to maybe Y Combinator, Rock Health, but there's only a certain number of slots there. Have we thought about the first 25K to get the people to do 3 months of work and really sort of take some high risk, but get it super early with the sort of angel list, this is a great idea, great UX, whatever, great designs, go make it.
Yeah, true kind of friends and family sort of financing. The market has changed because it used to be some companies would do a seed, many would do an A, a few would do a B, and so on. And now it's just become, there's sort of these seed rounds and there's these growth rounds and there's nothing in the middle. There's no classic Series A or Series B around right now. Most classic venture capital is now doing growth rounds. And some of these companies need so little cash. Look at WhatsApp, right? The ROI and how much money it needed versus what it took. Bitcoin's another example. Guy developed it for free. No one still knows who he is. Made $500 million. That's an example of a startup.
$500 million.
Satoshi Nakamoto, whoever he or she might be.
The NSA.
Yeah.
The NSA made another $500 million. Good job.
They're paying their budget.
Your country thanks you, Jason.
So the very, very early stage pre-concept is really difficult for a couple of reasons. First, it's purely a team bet. Secondly, most of the good teams already have a technologist on the team. So either they can already do it without the 25K, or they need more than 25K because they're doing hardware or something very deep and difficult.
So it's unnecessary.
It's not that it's unnecessary, it's a very narrow thing. It ends up being a friends and family or incubator kind of stage thing, and I think that already gets filled pretty well.
But I think there's also another important point. I think people underestimate the importance of pain and misery in building a startup. I mean, I knew you when you were just starting to think about building your startup, and you went through a lot of pain and misery.
Yeah.
But it also informed some of the difficult decisions you had to make, and I think it made you much more successful as an entrepreneur. I know it was the case for me. I spent a lot of time talking about Naval's lean years, but I know they shaped who he is, and for Gil as well. If 25K showers out of the sky because 8 dentists or 14 retired school teachers are dazzled by your mock-up or how elegant your AngelList farm team quasi-Kickstarter pitch is, I think that takes the misery out of doing a startup. You should be borrowing money from your mom or your dad or your best friends, and you should be waking up at 3 a.m. in the morning going, God forbid I screw up. Not that you should be paralyzed and unable to make decisions, but I think free money distorts things, and I'd actually prefer not to see that happen.
Are we experiencing some of that, Naval? Putting AngelList aside, but Are we entering that free money? Maybe it's getting a little bit too easy in your mind. Do you see startups now coming to AngelList with 250K already funded? They want another $1.5 million, and you say, I wouldn't fund this, and I'm worried about it being on AngelList.
Well, definitely at the seed environment, I still feel like it's still a very low probability, high outcome kind of game. And so as an investor, I personally prefer to make more lower price bets than a few higher price bets because I don't have that certainty at this stage. And I really think, at least for software companies, the right way to do it is to raise a small amount of money and use that to prove out something big and then go for the big amount. The very large angel rounds, the $1-2 million rounds, I don't think that's a norm, nor should that be the norm. I know that there is an argument for saying, well, that allows you to get much further and so on, but from the investor's perspective, you should be a little hesitant to participate in very large seed rounds without there being any proof points about what they're doing.
My only comment would be, call me an optimist, but I've heard, isn't it too frothy? Every year I've been doing this, except 2002 and 2009. Those are the only 2 years where I didn't hear, isn't this frothy almost every day.
Oh, no, it was still pretty frothy.
Okay, so let's talk about, again, back to efficiency. I've invested in a couple of companies or looked at a couple of companies and I say, who's the lead investor? And the entrepreneur says, nobody. I am raising $1.5 million, no board seat, no control, no reporting, nobody gets anything, and it's an A round, which to me, I get a little worried that there's nobody to, forget about answer to, but nobody who's meeting with you every week saying, hey, let's talk through how this is going. Is this becoming an issue for you, Gil, when you look at these deals? Or are you becoming like the new pseudo board member, even though you don't take a board seat for some of these larger angel rounds?
Yeah, it depends, right? In one of them, I actually did take a board seat because I wasn't sure there would be a lead, and the other ones, it's been a very, Max, frankly, I don't think he needs a board member to make him smart. He's already smart. I think with anything else, like with anything else, you go, gee, it would be nice if there was one person who cared more, who would coach, who would be there. On the other hand, there are plenty of athletes who do quite well without coaches. Other athletes who need coaches. So, the answer usually is it depends. I wish there was a better answer.
No, but I actually think as in many things, the way people actually think and conduct their business has changed below the waterline, and we're just realizing it now. If you look at how people ingest and consume and process information in their work life, it's radically different than it was 30 years ago. I mean, even just having a cell phone radically changes the way that people behave. And so when we watch entrepreneurs in our portfolio, and we are super early stage guys by and large, we see that the way that they think is much more interrupt driven. They don't want to be coddled. And to Gil's point, if you're enough of an athlete to start a company, and to my point, go through that misery, for whatever reason, you want a big win, you want to change the world, you don't need somebody holding your hand every 2 weeks. You need somebody that when you call at 3 in the morning, whether it's Naval or Gil or myself, is going to say, yeah, I've been through that before, I might have a solution for you, or you need to call the Harvey Keitel character from Pulp Fiction, and he'll
fix stuff.
Yeah, he'll come over and clean up the blood, whatever it happens to be. And it's more efficient for us as investors. We actually take relatively few board seats. We do some observer seats, but mostly we're just a 3 a.m. call. And I think as a result, we have a more honest relationship with our entrepreneurs, because they're not preparing 40 slides to say, the body was here at 3.
Yeah, here's how it all went wrong.
Yeah, exactly.
I hear you on the 3 a.m., right? I might be worried about that, I guess. On the other hand, UXPen had 90-something angels in the deal, and I've been on at least 10 email threads where those angels are introducing us to customers, bringing us into their office as a potential lead, suggesting conferences the CEO should go to. I mean,
But that's what I mean. It's interrupt driven.
Crowdsourced that part too, right? We've crowdsourced the advice. Frankly, UXPen got more value add from the angels in the syndicate than Fastly got from the first VCs.
Yeah, It really depends. I think there is a mentality that says you need a board member, you need oversight, you need judgment. But the reality is it's based on how competent is the entrepreneur on their own versus this lead, how much value do they add? Because some leads actually don't add that much value. It's required a report. They treat you like you work for them, and that's not what an entrepreneur wants. Other leads, on the other hand, will add value. Most seed funds, to Matt's point, don't take board seats in most companies they invest in. So that ship has already sailed. The syndicates model is designed to create at least one lead investor who cares and who's on the hook. But every company is different now. And the number of companies has exploded so much that the number of high-quality leads who are going to sit on their boards and advise the companies, it's not there. The math just doesn't even add up. It can't happen.
I'd actually like to go a step further and say you should think very carefully about investing in someone that you don't trust to call you or post to your collective set of smart, helpful angels if there's a problem, or that you think is going to, also when things are going well, that you're worried about information hiding. They're not going to tell you the rocket's going this way and yeah, now's your time to add more fuel. If you don't trust somebody enough to have a dialogue with you, you might not want to write them a check in the first place. And I actually think in terms of self-fulfilling prophecies, again, people in this kind of crop, this generation, if you will, of entrepreneurs, who are hardwired to share, to engage, have a higher survival metric than some old school entrepreneurs who aren't interrupt driven, who don't share, who want to hide everything.
You must be studying the follow data, the intro data at AngelList. What are some of the things and the trends you see in that data?
Definitely high quality syndicate leads matter. I mean, when Gil sticks his hands up and say, I'm doing a deal, people pay attention. I do think that right now, for example, the environment is actually less frothy than it was in 2010, 2011, 2012. Certainly 11 and 12 are probably the high water marks in the industry in terms of how quickly people will go into deals. I think now they're being a little bit more cautious because a lot of these deals will come for Series A and they realize there really is a narrowing out the Series A funnel. I think valuations have come a little bit more in line. There's definitely a sense, I think, from people more that they need to find and hunt in deals. So one thing I see a lot at AngelList is, we can't feature everybody, obviously, we can only feature a small number of companies, but very often I'll go to some company that we're thinking about featuring, I'll be reviewing the profile, and I'll look and I'll see, it already has 10 or 15 introductions. How did they get that? I found one that we never featured that had 70 introductions requests from investors. And it's just that there are now people who sort of ignore our featuring and the stuff on the front page, and they go digging, because they know that the good stuff, their job is to find it before everybody else.
I've stopped, in some cases, following people explicitly or asking for an introduction and just gone direct to them via Twitter or something because I don't want to negative signal them or I know people are watching who I follow. So now that I know people are watching who I follow, I don't want them to think that because I didn't invest in something, there's something wrong, or it's just, I'm only somebody I'm supposed to do. Or people just rushing in before I have a chance to meet with the founders, and then the whole thing blows up. And it's...
You also have to remember, every associate in every venture firm is already on AngelList, busy trolling for deals too, so it's actually a bigger community than just angels.
You think that's true, yeah?
Yeah, I'd say almost every venture firm that's active in the seed space, at least one person who checks in on a regular basis.
But I can speak to that because I had a 2 a.m. brain fart where I suddenly thought I was going to start a company. So I put up a profile for Newco.
I remember.
I didn't know what the hell my idea was going to be. And 48 hours later, I had 500 or 600 introductions. And I actually ended up going through and analyzing, like, by title, who the respondents were. It was a perfect pie chart of a third. So a third angels, there was a third associates at a venture fund who wanted to take me out for coffee, and there was a third seed funds who actually wanted to do a deal. And I didn't end up starting the company, but it was amazing how many people are looking.
We still weep softly over this.
I know, you tried to fund it too. It's going to be huge.
Let's talk about what are the things entrepreneurs need to focus on in 2014, because this has changed over our careers. When we started, it was where's your model, what's your business plan, competitive analysis, competitive matrix, your team then became what's important. And now things have radically changed. I mean, if you pull out a deck where you bring an MBA, it almost, again, you're talking about negative signaling, people are taking their MBAs off of their resumes and LinkedIn pages. They want to be, outcasts. What should an entrepreneur focus on today most? If you had to pick one thing for them to really, really focus on, what would it be, Matt? The number one thing, not 7, the number one thing.
Rock star technical chops. Just, I'm not going to list 7 things, but I'll explain why. We find that in terms of massively disproportionate outcomes, particularly in the enterprise space, it does correlate strongly with entrepreneurs' technical skills, we'll call it the spectrum of technical operating skills. And from a risk perspective for the entrepreneur themselves and for us, they're more accretive acquisitions, like that category above acquihire, when the acquirer goes, holy crap, I will never be able to do this in the next 5 years. And so that's for kind of combination insurance policy and likelihood of giant alpha. That's what we look for, and we're unashamed about suggesting to entrepreneurs that they focus in on that.
Great, that's a great answer. Gil, what's the number one thing? Not 7, not 3, not 2, but 1.
So I'm more on the consumer side where it doesn't take as much money to get started. I really do honestly believe if you come to Naval or me or another angel and you say, I need 200 grand to start a company, I look at you and I go, dude, you could start the company by Thursday. And if you don't already have a website up, like HTML is not that hard. I mean, look at Groupon. The first product was basically a WordPress site.
Which site?
Groupon.
Groupon, yeah.
Right? I mean, there was no tech. It was like none. So for me, it's, to your point about the pain, like, have you built it and are people starting to get addicted? I want to see 10 addicted people.
Okay, so get those 10 true fans, and then the conversation's going to go in the right direction with you.
Break through the clutter of someone really cares.
Got it. Well, what's the one thing, if you had to tell people, hang your hat on
my
this?
thunder's been still a little bit. I'd have to go with Matt. Just amazing technical talent that's just obviously doing things that are difficult or doing things that look easy, but they're doing them so well that for somebody else to replicate would be difficult. Example is how Instagram made it so incredibly easy to upload photos, or I'm not a WhatsApp user. From what I understand, that they were on many platforms that other people wouldn't even touch that helped them with the network effect. But I still look for amazing technical talent doing hard things. This is the technology business, technology industry, and if you can't recruit a great technical team at the outset, you're probably going to have a very hard time adding on to it later. So to me, the founding force on the growth of the software industry or the technology industry is not the markets, because there's still so many markets that need to be attacked. I definitely agree that software is eating the world and will continue to do so. The bounding force on it is amazing technical talent that is kind of working on the right things. So just recruit great people.
Okay, let's flip it. What's the most important thing you should look for in an investor? And what's something that if you see an investor, you should absolutely not engage with them as a founder? What's the worst thing you can find in an angel that you just want to, or an investor that you really don't need as an entrepreneur? And then the thing that you want to really optimize for when picking those first few investors, Matt?
No, I mean, I'm harkening back to my days as an entrepreneur, and, I'm going to have a hard time with the 7-thing restriction. I would say what we look for in co-investors, what we look for in existing investors in companies, what I'd want for my wife, my kids, my friends, would be radical honesty. And I want to give you a little context on that. So much flows from just being honest. Humility, right? If you're honest about your own intellectual capacity or limitations or the velocity of the world changing around you, that implies humility. And humility means you're open to ideas and you don't just sit in a board meeting or, on email yelling out stuff that sounds cool or you read a Dilbert cartoon 10 minutes ago. Honesty also means you're reflective about how you can help build stuff. So people who are radically honest and be more generative and supportive and engaged. And they're also part of the feedback loop of constructive criticism in a learning organization. And they don't shift you in the kidneys while laughing. That's also a big plus. for
So
me.
I guess the person you don't want involved is somebody who's not honest, not intellectually straight shooter.
Yeah, and by the way, there are people, I'm not going to name names, there are people that we co-invest with or we encourage to invest in our companies who are really tough bastards who have, and by the way, have produced some very, very large returns over the last 20 years, including some big recent ones, but they're not dishonest. In fact, some of them are radically honest. I admire them for their honesty.
They're honest, but they can be bastards.
Yeah.
What's an example of, without telling the first name, give me an example of behavior, an instance where somebody was just an incredibly honest motherfucker.
You know, there are two examples of this. Having been an entrepreneur for a long time and still kind of being one in disguise, I always have a hard time telling somebody that the dream is over. And we have co-investors who not only are prescient about nailing the exact minute that the dream died, but are like, you have responsibility to your employees, you have responsibility to your investors, turn off the lights, send the cash back in, you're done. Good job, you're out of the majors, back to the farm team, you're in the showers, boom.
Hit the bench.
Yeah, seriously, that's number one. Number two is a variant of that conversation is somebody who's been neck deep in building their company. It would have been a word it's called the deep dark chasm of misery, the grind or something like that. He had a great post on this. So this person, male, female, has been in this misery, done a great job, survived this and that, recruited a good team, but you know what? They're actually not scaling. So we have colleagues again who go to the exact minute, no. You failed to scale, F you, you're gone. It's the right thing for the company, the right thing for your employees. And that's radical honesty. I'm the guy doing the Woody Allen routine going, could you step aside if it doesn't make you sad? I mean, I try to be tougher, but it's emotionally painful. These guys are just on it.
Wow.
And by the way, they are doing a service to that person's wealth creation, to their employees.
Yeah, sometimes
and to the
people are their
investors.
own worst enemy. They need to get out of that top slot and let somebody save their own value in their equity.
Yes.
And you have a tough time doing that to somebody who you have been such an early supporter of and telling them their dream's over.
You get emotionally invested, and there's a lot of trust and good faith, and it's like a bad Quentin Tarantino or Japanese gangster movie. You don't want to be the friend that pulls out the gun and shoots somebody.
Right. Gil, what's the most important thing to look for in an investor today?
Most important thing to look for?
Yeah, like the most important quality. We heard radical honesty, even to the point of being a massive bastard.
It's tough, right? Because I go through the litany of I want someone who knows the industry, I want someone who's been where I've been before, I want someone who has empathy because they've done what we're about to go do.
You get a hit 7. Right?
So let's circle back around to the number one.
I mean, one of the ones I even pitch to people is I even can help with tax strategies now to avoid capital gains through someone on my syndicate who gave me some really interesting nuggets that I didn't know were possible. So there are lots of things an investor can do, but going back to something that Matt said, actually, if I had to come up with one thing I want, I'd really like someone who has big ears and a small mouth.
Love
And I
it.
really get very frustrated with investors who have a big mouth and small ears.
I love it. Naval, I mean, you see it all.
I would say that if I could give two answers for a second. If you're the kind of company that wants the help, and unfortunately a lot of the times, this is a secret that many investors know, your best companies don't need you. You're the one calling them, trying to get an update. They don't need you. They're busy executing. They've got it figured out. They've got product market fit. But then there are companies that actually do need you, and some of those turn into great companies, and many of those don't. That's kind of where you spend your time. So where companies that do need you, obviously value add is a really big deal. Value add just means you care. You have an investor who cares so much that you really get the sense that if this guy didn't have other stuff going on in his life, his gal, other stuff going on, they'd be there sitting next to you and worrying the same amount. And sometimes you need that. So someone who really cares is important. But overall, if I had to pick one quality in just dealing day-to-day with investors, very similar to what these guys said, it would be self-awareness. People who know when it's sort of their turn to speak and when they actually have insight, and when they're just speaking because they have authority and power and money, and that's why you're listening to them. I think one of the problems of being an investor is that everyone tells you all day long how good-looking and smart and interesting you are and how knowledgeable. And
Wait a minute, where do I get this?
and they're talking to your checkbook, they're not talking to you. And it really goes to your head. I mean, if that happens for 5-10 years, you end up a ruined human being. It's like being an incredibly attractive young person your entire life. Wow, wouldn't that be great? Except you'd be so self-unaware, you'd have no idea that half the stuff coming out of your mouth is bullshit, but everyone's telling you how smart you are.
You're referring specifically to Tom Perkins, like he.
No, that's all bullshit. It's not happening.
So I just think it's very important to find an investor who is very self-aware, and very often those people will have recently been an entrepreneur, so they know how difficult it is, they've been, as Ben Horowitz says, they've been through the grind, or Bill Lee said, chewing glass and staring into the abyss. And so these people are not going to say something just to say it. They're not going to exercise power over you just because of the power. They're going to be extremely aware that they're not as deep into the situation as you are. They're going to know that they have a few data points that maybe they can pattern match against. They're going to be very careful not to interfere with your day-to-day activities unless they have deep conviction and knowledge and insight.
I'm going to apologize about the noise outside. That's the union who is just making it be a torrential downpour right now. We give the union another $6,000, please. This is actually good for California. We've been having terrible
rain dances outside.
Actually, just add one more thing. I think your corollary to that is whether it's self-awareness, engagement, radical honesty. Close the process around the following. How can I help? And then delivering on exactly what the task was. That's a really good signal in an investment. And that's why we like working with these guys.
Tell me, and really think about this deeply, the worst behavior you've ever seen on the part of either an investor or entrepreneur. We're not going to talk about, obviously, the person or the company, but just so entrepreneurs over here can know exactly how insane or fucked up things can be, and then how you dealt with it. Well, I know that you've had personal experiences that have been difficult on you.
Yeah, I don't want to go into that too much.
What's the worst situation you've come into, in this game, as it were, either side of the table, and how did it resolve itself? What lessons did you take from it? Anybody can go first. Scotty. And the one that you thought of first, but that you don't want to talk about is really the one I'm looking for. So don't try to pick the second or third one that's safe. Give me the really tough one.
I'll volunteer for that name.
Thank you.
Unfortunately, it's going to be a blast, right?
No, actually, I mean, like, I would say I've been lucky in that I haven't had any horrible experiences with investors on boards. I've been honest with entrepreneur, but part of that is maybe I don't listen to them enough. The worst one is actually my first board seat, where I came in and I had a vision for what the company was. It was totally inconsistent with the CEO's. I invested and joined the board because of what I thought the company should be without having listened very well to what he was saying. And as a result, I just kept saying what I thought it should be, which is fucking irritating. You're the guy on the other end of that. So, having a shared vision and, again, the big ears, that was the thing I learned. I had to do a better job of listening.
How many years ago was that?
It's like 99 and 2000, so a few.
And you've done so tremendously well for yourself, just, in your career. It's a pretty great career. Why do you still do it? I mean, you could be retired and not even in this game. And the level of hustle I see from you now, I think is greater than I've ever seen from you, Gil.
I wasn't very good at sports, so this is my sport.
Is that really on you? We'll see. Matt, give me that. Holy shit, this is the worst it could ever be. What you learned from it.
Wow. I used to joke.
Most painful.
I used to joke in, I guess it was my second or third company, that I and the other other founders got violated in orifices that we didn't even know existed. It was pretty abusive. And I'm being deliberately vague so nobody knows which company it was. I think the macro point is actually more important. And I will say this to what is hopefully a largely entrepreneur-centric audience. The dirty little secret of venture capital or angel investing is that 9 out of 10 companies that could have made it get piloted into the ground, not by the entrepreneurs, by the VCs, but by a bad dynamic between the two of them. I've rarely had, I've had a tiny handful of psychotically incompetent entrepreneurs, but I've also had far more problems where the people around the table were all exhibiting small ear, big mouth syndrome. And I think it's a tragedy of our business. If we had more people with a kind of Zen, Dalai Lama, smiling engagement that Naval has almost everything that I've seen him do, we'd have another $10 trillion in the tech industry. And the meta lesson that I drew a couple times in my career from being the bad guy, from being small ears and big mouth, or from watching other people do it or seeing this tragedy is, you have to encourage this behavior that Gil talked about 360 degrees. And if it means throwing yourself on the railroad track, and this gets back to radical honesty and being contributory, and you got to let people, vent or make you the bad guy.
So take me back to that moment where you were absolutely screwed. You want to tell the story. Tell me the story.
No, I actually,
it was brutal for you. You know it was brutal. Tell us what happened and how did you...
There's no way to no way to discuss it without incriminating the parties responsible. But I will say, I will say somebody who's still in the business who's actually involved in the company did something that actually still irritates me as an investor to this day, and I think a lot of other responsible investors, which is the backdoor deal. So in the process of an acquisition, they insisted on negotiating the deal. They did an okay but not great job. There was some weirdness. Like, why didn't you push harder on this? It seemed like you caved early on that. Why are we mowing the new chairman's lawn every Sunday while wearing lederhosen? This seems like some weird terms in here. Being totally facetious. And this price, it seems like you caved on the price. And then, lo and behold, the executive who negotiated the deal got 2 or 3x the total deal value in submarine options. Like, as really a giant fuck you. They didn't even bother to hide it. It was like, here you go, thanks for selling out your colleagues.
Wow.
Yeah. And so, by
did
the
you
way...
ever reconcile with that person, or did you just avoid them at all costs? It's a small industry.
No, I just life's too short. We got an entire room here full of people that are probably statistically all pretty smart and honest and generative people who are building great companies, and I'm focused on them and not on... So
you move forward in life. You can't live in the past.
You have to. But what I would say, you asked about lessons learned, is, look, don't fuck your friends and don't fuck your investors. To that point about big ears and small mouth, that's kind of part of the continuum of being on the same goddamn team.
And Naval, you get to back clean up here. Thank you for sharing that.
I have a deep belief that the best returns in all of life come from compound interest. And I think that's true in health, in your relationships, or in your work. So if you're dieting, you want the diet that you can stick with for your entire life, not the 2-week juice fast or whatever it is. If you're working out, it's the workout you're going to do consistently for the rest of your life. If it's friends, it's the people you're going to see till your deathbed. If it's your person you marry, it's the person you'll look at every day and be happy until the day you die. And in work, the same way, it's the people that you trust enough that you work with them 10, 20, 30, 40 years from now. That is the most important thing. And the one thing that I find this industry screws up more than any other, which causes a conflict between the entrepreneurs and the investors, is that it is possible in this game, in the game theory sense, to win a huge amount in one move. Very often you'll see there's the acquisition, there's the exit. If I just move my king in front and take that pawn and cut everybody else off, then I take home the winnings. And that is what annoys me more than anything else. And whenever I've had issues on either side, either as an entrepreneur or as an investor, it's because somebody at the table thinks they're going to win in one move, and often they do. They take home so much money they never have to work again, and they give everybody else the finger in the process. And I think that yes, you may win on the monetary sense, but you've lost the compound interest sense. And so it's just short-sighted. And that's probably the thing I hate most.
Naval, Gil, Matt, this has been a tremendously honest and informative discussion. I thank you, and I think the audience thanks you as well. All right, guys. And please go check out some of the companies. Thanks so much for making the trip.